Okay, let's go over part 5 now and wrap this series up to give you the complete knowledge of futures. Okay, I want to wrap up this introduction to futures with the contract rollover. A lot of people aren't familiar with the contract rollover, but it only rolls over 4 times a year. Now, that's not important when we day trade, but it is important to know which contracts expire and what times. So, to give you an idea, when you day trade, you buy the contract that current day, you sell it that current day, and you're not worried about an expiration. If you notice on the chart here, I've got listed all 4 times that the contracts roll over. What's important about that is the volume, as it decreases coming closer to the time to roll over to the next contract, you want to make sure you go ahead and push that forward to the next contract and start trading that exact contract. So if you notice on the bottom left, it shows you in December, that contract was NQ, meaning the mini contract for the NASDAQ 100. The most forward contract at that point was Z. So you're trading the NQZ 2024 all the way through around December, and it shows December the 17th. You're going to want to roll that over to the March contract. Now, what happens is a few days before that, you'll start to see the spreads widen, you'll start to see the volume lowering, and you'll even get emails and notifications, hey, it's getting close to go ahead and roll over to the next contract, which would be the March contract. If you notice, that's NQH 2025. So there's not a lot to learn about this, but it is good to have this knowledge, to know that it happens 4 times a year, so you can always be in the most recent contract with the most volume.